Welcome traders. In today's video, we're going to be talking about a 5-minute scalping strategy. This strategy has an 86% success rate. I've done hundreds of backtests, and over the last year, I've had a lot of success with this strategy myself. But there is a disclaimer. This strategy will only get a high success rate if you follow it exactly as described, which means you must follow each and every step that I talk about in this video if you want to get this success rate. What you will learn in this training: how to use the volume profile, how to find key trading levels, how to trade divergences, and how to find those super sniper entries. Step number 1, you want to identify a range. You want to look at the 1 hour, the 24-minute, or the 12-minute to look at the overall structure, and you want to focus on ranging markets. I'll show you an example. Markets are ranging most of the time. So for instance, this is a Bitcoin chart, and we zoomed out quite a lot, and you can see we've got so many ranges happening within all these movements. And within these mini ranges, there's actually bigger ranges. So there's ranges within ranges. And since markets are ranging most of the time, this is a prime opportunity to use this strategy to become profitable. Step number 2, we want to pull the volume profile over the range that we've discovered. So we find a high, we find a low, and then we pull the volume profile. So this is just an example. We find a range over here, which you can see the high and the low. Then we grab the volume profile. It is located over here. It's a fixed range volume profile. We grab it from the start to the end of the range, and it identifies the value of the range over here. So we pull our volume profile. This is how the volume profile actually works. Once we pull the volume profile, the center here is called the value area, the point of control. This is the most traded area on the chart. This space in between here is the fair value. This is where price is a fair value. And this is where most of the trading actually happens. As soon as it goes out of this fair value, it goes into the value area low over here. If it goes above, it goes into the value area high over here. Whenever price comes out of the fair value area, it falls back in. Every time it comes out, falls in, comes out, falls in, comes out, falls in, comes out. And what we want to do is we want to look for shorts above the value area high. And we want to look for longs below the value area low. Step number 3, mark out key levels. We want to find out the key levels for the volume profile, the weekly levels, the daily levels, and the Fibonacci levels. Whenever we see price come below or above the value area, we want to start looking for other support and resistance levels that act as confluence for the entry. So first of all, we mark out the volume profile levels, the value area high, the POC, and the value area low. And as you can see, this is the value area high, this is the POC, and this is the value area low. And then we put those levels in a folder. Let me quickly show you. So as you can see, we've got these levels marked out already. We'll grab the volume profile, we drag it across, and we can see value area high, POC, value area low. Once we mark those out on the chart, we come over here. I've already made a file for them, and we can just turn them off. So they're in the file just turned off. And then we go ahead and do the weekly levels. So we go to the weekly time frame and we mark out all the weekly highs and lows. We mark them across, then we can go to the 1 hour and we can actually see how we've marked them out, and we label them weekly, weekly, weekly. Let me show you a quick example. So we go to the weekly time frame over here. We're going to mark out the levels that are relevant to where the price currently is. You can also click on the magnet over here, which snaps it, and you'll see we just click over here, here, and it literally just snaps it onto the area. And we're just clicking it on the wicks and the candle bodies. I've already marked these out on the chart, so I'm just going to erase these. I just wanted to show you an example. So I have them marked out over here already, all the weeklies. And as you can see, if we go to a lower time frame, all the weeklies are nicely marked out, and see how price is respecting these levels. Once we've marked them out, we put them in the folder. Then we go ahead to the daily levels. We go to the daily time frame and we do the same thing. We mark out all the levels just like I showed you. And then we can go into the 1 hour, see how price is respecting those levels, mark out all the dailies, then create a folder and put all the dailies in that folder. Then we go over to our higher time frame, say the 1 hour. and we mark out all the Fibonacci levels on the 1 hour. I'll quickly give you an example. We go to the 1 hour time frame over here. I already have these marked out, but I'll just show you how it's done. So we use the Fibonacci retracement tool over here, and we're just going to mark them out from highs to lows of all these highs and lows of all the high points and the low points. And I mean, you can already see how price is respecting these levels. I've already done this. I just wanted to give you an example. So we go from the highs and lows, and then from the lows and the highs. So I've already marked all of these out already. Then we go into a lower time frame, the 24-minute or the 12-minute, and we start marking out the highs and lows again. So we get our Fibonacci's measured on the higher time frames and on the lower time frames. And then we go ahead and put this all into another nice folder. Now that we have all our levels marked out, we add all these levels together to look for confluence. Whenever we see multiple of these levels overlap each other, it's a sign to us that this is a strong confluence area. These are levels where we want to get interested in taking trades from. We want to always buy low and sell high, and sell high and buy low. Step number 4, mark out these confluence levels. So once we add all the levels on the chart, we're going to find the areas that overlap the most. Like over here, we've got a daily, a weekly, a value area high, and a 6.8. So we mark that level out. Here we've got a point of control, a daily, a 618. So we mark that area out. Here we've got a daily, a weekly, and a fib. So we mark that area out. Then we wait for price to come to these zones to look for entries. As you can see, I erased all the lines. So now we're just left with these entry zones. But note, if price does not come into one of these levels, we're not going to take a trade. When price comes to one of these levels, how do we get a precise entry? We look for divergences at these levels. We use an indicator called Market Cipher, which helps us easily find these divergences. This is Market Cipher over here. It's a paid version, but there is a free version called Fu Manchu Divergences. It's located over here. What is a divergence? It's when price and the momentum waves are doing the opposites. So you can see price is going down over here, but the momentum waves are going up. As you can see over here, price is going down, but the momentum waves are going up. Price is going up, but the momentum waves are going down. Price is going up, but the momentum waves are going down. So it's when we're seeing opposites from price and momentum, which is showing that there's going to be a change in the market. What we do is we wait for price to come to our level, and then we look for these divergences. So price came down over here. We saw this divergence on Market Cipher or Fu Manchu. We saw this divergence here, and this became our entry. And as you can see, we had this great move all the way up to this level. As it reached this level, we had another divergence. Price was going up, but the momentum waves were going down. So we have another entry over here. You must at least see divergences on the 12-minute time frame as a confirmation. So first we want to see these divergences on the 12 minutes. It approaches our zone. We see it on the 12 minute, which acts as a confirmation. You can see price got to our zone, we've got a divergence. Price got to our zone, we got a divergence. Price got to our zone, we got a divergence. And this is on the 12 minutes. Then we go down to the 5 minute to find our precise entry. Price comes to our zone, and sometimes it can go a little bit out of the zone as well. It doesn't have to be exactly in the zone. As long as we see this divergence on Market Cipher or Fu Manchu, and we see the divergence on price, this becomes our entry right over here. And it comes down again, we get another divergence over here, and it shoots up, we get another divergence over here, and it shoots down. So that is this complete trading strategy. I'm going to go into the chart now and show you guys a little bit on the chart. So we come onto the 5 minute chart here. Got our levels out, and just wanted to show you on the chart. Price drops, comes to our level. We got a divergence in price over here and a divergence in the momentum waves, which means this would have been our entry right over here. Same thing happens again. Okay, first it ranges a bit, it pumps up, and then it shoots up to this level over here. We see that we've got a divergence over here and a divergence on the oscillator. And this becomes our entry over here. And then price goes all the way back up to this zone. And we didn't really have such a confirmed divergence, so we wouldn't have gotten involved there. And price came up here, we didn't get another divergence, we just got a big momentum wave. So if we want to really win at this strategy, we've got to make sure price comes to our zone, we get a nice divergence on at least the 12-minute first. So we start with the 12-minute, you can see we got a nice divergence here. Then we go down to the 5 minutes for our precise entry, and here you go. This would have been our entry over here. So I hope this is making sense to you guys. If you have any questions, shoot me a message. Let me know once you test the strategy out. Happy trading.